They fly holidaymakers to places like Spain, Italy, Greece, and now Thomas Cook has a debt crisis of its very own. The tour operator's share price plunged this morning when it told the markets it needs yet another £100 million loan. The Arab Spring, floods in Thailand and the euro crisis have all kept travellers at home, whilst Thomas Cook had already borrowed heavily to expand. So is the 170-year-old institution facing the end of the road? Katie Russell has this report.
Thomas Cook has been sending us on holiday for 170 years. Then, far-flung travel involved weeks on ships and trains, intrepid voyagers confident they were safe in the hands of Thomas Cook and Sons. Though on this trip to Egypt, they brought the guns along just in case. Luggage sizes have shrunk since then. Today, Thomas Cook's shares plummeted on the news it's asked for more cash.
So don't just book it, Thomas Cook it.
The trouble in travel is that you have to incur pretty high fixed costs. You have to book hotels, you have to commit to plane capacity well in advance of travel. And that means that if demand downturns unexpectedly, then you can be left with much less business than you thought you would have, but you've still got those costs.
It's tough on the high street, and the company will likely shut some of its shops.
I stick with the internet because it's a lot easier to book a holiday on the internet.
In fact, I think the last one was through Thomas Cook, actually.
Are you surprised to hear a brand like this might be in trouble?
Yeah, I suppose so, although it's tough times.
Are you going on holiday anytime soon?
No, I can't afford it.
Thomas Cook has around 1,300 shops in the UK. The company admits about 100 are actively losing money. But in the era of do-it-yourself holidays booked on the internet, it's starting to look like a rather dated way of selling travel. Shops like this perhaps becoming just as old-fashioned as those beautiful company posters of the past. Thomas Cook says its top destinations include North Africa and Thailand, hit by the Arab Spring and flooding. Then there's the Eurozone crisis. Its chief executive quit nearly 4 months ago. Twice in the last month, it's had to tap the banks for an emergency loan, bringing the total debt to £900 million. And the share price is headed downhill fast, dropping more than 94% this year. It's a sorry state of affairs for the company that began when a cabinet maker took a party of fellow teetotalers to a temperance rally and became the king of the excursion. As Europe's second biggest tour operator, Thomas Cook is keen to emphasise that holidays booked through the company are protected by ATOL and entirely safe. But all this negative publicity is damaging.
This is the big danger for Thomas Cook, that what happens now is that consumers just desert them completely. I think it is a self-fulfilling prophecy. Confidence has gone in the market. If confidence goes with consumers, then really there's no way back for them.
Those predicting the end of the package holiday may be premature, but at the moment not enough of us are booking them, and no amount of celebrity endorsement will turn that around in the short term.
It is the perfect holiday.
Don't just book it.
Thomas Cook it.
Katie Russell reporting.
Well, Sam Verhagen is Thomas Cook's chief executive. Earlier, I caught up with him. So, to put it bluntly, what has gone wrong?
We knew, of course, that it was going to be a bad winter, and we planned for that. In the UK, for example, we reduced our capacity, and we also reduced capacity in France, but we didn't really know that it was going to be so bad trading the last couple of weeks as we have seen now.
If you look at the hammering your share price has taken today, I mean, it's pretty clear, isn't it, that the markets think that there's a possibility that you could go bust?
Thomas Cook has been around for a long time. It's a big, great company, and we have been sending customers out of the UK overseas for over 100 years. And I'm very sure that they will continue to travel with us next year as well.
If you went bust, can you guarantee that holidaymakers who have booked a package holiday with you would get every penny of their money back?
We will not go bust.
But if you did?
If we did, all our customers that are buying package tours are protected by the ATOL and similar insurances around in Europe.
But what if they've just booked a flight and not a holiday? They're no longer protected under ATOL then, are they?
If they have booked via internet and probably paid with a credit card, then the credit card is protecting them.
But if they just booked the flight with their debit card, they would have to have bought insurance to be protected, wouldn't they?
That's right.
Now, the credit you've asked the bank for now would take your total debt to something over £1 billion, which on a company that's only worth less than £100 million is pretty unsustainable, isn't it?
We said already in August, when we updated the market of our trading positions, that we had two big projects going for the company. One was to restructure the UK business, and the other one was to strengthen our balance sheet.
But you built up way too much debt, haven't you?
That's correct.
A bit like Italy or Greece, but in a corporate world.
But in a corporate world. But that is, of course, what we are trying to address now by divesting and also making sure that we are running our business in a more profitable way. And we have stopped acquisition, of course.
So would you make some kind of gesture by accepting a pay cut yourself?
I don't think that that would be the proper thing to do. I think the best thing for me to do is to make sure that we are getting that support from the banks that we are asking for, and that we will be a prudent, robust holiday company.
Sam V. Hagen talking to me earlier.